Hi guys, welcome back to my new YouTube channel. If you are new to this channel, make sure you hit that subscribe button, smash the notification bell so that you never miss out on any upload. Okay, today we are gonna be showing you how I go about my entry and exit strategies. So let's head on to the chart. So when you this is a chart of GBP USD, GBP USD. So right now it's on 15 minutes time frame. Just have to go and change it to 4 hour time frame. Mostly I go to the 4 hour time frame to see the main trend. So this is our 4 hour time frame. Let's shrink 4 hour time frame. You see currently price is making higher highs, lower lows, higher highs, lower lows, higher highs, lower lows. So according to our 4 hour time frame, GBP USD is on a bearish trend. So right now I move to 1 hour. Wow, and on the 1 hour it's kind of consolidating, but partially an upward trend. It's an uptrend partially. So this means that 15 minutes time frame it will be an uptrend. So let's scale down to the 15 minutes time frame. 15 minutes time frame. So with the 15 minutes time frame, alright. So I have to start marking now. This is a high, and this is a low. Sorry, this let's mark this one as a low. Then I can see a break of structure here. So what I do is I just mark out the break of structure and I'll label it BOS. And when you mark out the break of structure, I simply look out for the last candle before the candle that broke the structure, which is this one. This. So I just map it out as my order block. You see, I just map it out as my order block. So right now I map it OB, order block. So this is the fair value gap here. Fair value gap. FVG. But mind you, this is an old chart, right? This is an old chart. So I'm just showing you how I would have traded it if I was on the market live. That's how I would have traded it. So just keep on watching and see how it will go. You see, the concept I want you to understand is when you first open the chart, look for a break of structure. Look for the trend first. When you look for the trend, look for a break of structure and look for the source of that break of structure, and you map it out and wait for liquidity sweep. So here price created liquidity, here price created liquidity over here and swept it. So when price came to sweep this liquidity here, it moved and tapped into our order block. So right now I would have just gone for a long here and put my stop loss at the recent low, then target the other high. So this is 1:3, value 1:3. So that's just basically what I would have done. And when market opens, this trade is gonna play out. Just that I wouldn't advise you to take that trade because your stop loss will be much more than your take profits, or the risk to reward ratio is gonna be very small. And to apply proper risk management, you don't have to risk more than you don't have to risk more than you make. That's simply the concept. So let's move to gold. and I'll see what happened on gold last week. XAU USD. So I like to choose under. Wow, I even made a box on this. So as usual, you go to 4 hour time frame. 4 hour time frame. You can see gold is kind of consolidating, but this I can see something. You see this line that is mapped here? That's the recent low, right? And I think price is gonna be moving down here, and we'll see the reaction over here, and we'll determine whether to take a long or a short. Let me scale down. Let's map this one up too. Right, that's it. Very simple. And let's scale down 1 hour time frame. So with the 1 hour time frame, yeah, prices are currently getting to that side of the listing. So right now I can see something like a break of structure over here, and this is just kind of liquidity. When price gets here, it will shoot up because this is the recent low over here. This is the recent low. So price has to grab this liquidity before it shoots up. And price of gold nowadays, gold looks like it is kind of consolidating, and it just give you a V1's profit. That's how I kind of say it. It just gives V1's profit. And most of the time on gold, you don't have to wait your full TP. When it's about some pips to your TP, you are advised to close your trade because anything can happen. Just make sure that there's no news coming, or there's no high impact news coming, because these days gold is really crazy. So that's just basically what's going to happen. But right now, the way gold is, I don't advise you to go in for a trade right now. As a beginner trader, avoid gold because gold is a very volatile pair. So I advise you to stick to GBP USD. GBP USD. Just stick to GBP USD right now. That's what I can advise. It's the easiest to trade as a beginner trader. GBP USD is the easiest to trade. So when you're trading a lot of pairs, you don't really get to master all the pairs. But when you choose less, when you choose one or two, you can be able to master the chart patterns and how the market moves. But mostly when you stick to one pair, you get to understand how the market moves. And it's pretty simple. So as you can see here, you can see a break of structure on the 1 hour time frame. Let's mark it out. I can see break of structure here, and you can see our order block around here. Oh, this is all B, and price tapped into it and moved. So right now what you can just do is place your long, uh, and you target the next high. As simple as that. That's it. So this trade is going to play out, and I'll see how it's going to play out to the end when market opens. I pray that market opens with a gap in my favor. That's what I mean. So thank you for watching. If you've not subscribed, try as much as possible to do so, because that will really help me and keep motivating me to do more videos that will help you in your trading journey. So bye bye.